Stuart, what's going on in the commodity complex? What's behind this metals move, and should I be worried?
Yeah, and I think that's the key thing here, because I've had that question a lot over the last couple of days. It is really going on in metals. Now, I know we've got some exciting stuff going on in agriculture in the US, but that's for an entirely separate reason. So it's not oil, and it's mostly not the precious metals apart from the industrial ones. So we're really looking at copper and iron ore. These are the two fundamental ones. And they are moving for good fundamental reasons. So clearly the PMI numbers out of China over the weekend were not particularly encouraging. At the same time, we had data out of Australia showing fresh supplies coming into what are already record stockpiles. On copper, again, stockpiles building on the LME in London. That's also a bad sign. But let's not get carried away. The main thing to remember here, at least with iron ore and in the equity play, is even at $68 a tonne, the margin on iron ore for the biggest producers is well over 100%. This is still a very, very profitable business for them. It's just marginally less profitable than it was a couple of months ago.
Could it extend?
Yeah, I think so, and this has got to be one of the best flagged meltdowns in iron ore that I've seen for a long time. Even the biggest producers at the beginning of the year were saying, clearly we've got far ahead of ourselves. We're going to have a pullback. We're coming back down to $50 to $60 a tonne. And that seems to be exactly what we're happening. How much further, I don't know. It could always
James,
downside.
Thoughts?
I completely concur that this is going to be a very noisy market. And of course, the context of the recent retracement of prices was a very strong run-up prior to that. And of course, the market is going to occasionally have a shakeout, try and determine whether people have the real capacity to stick with the prices they've got to. For me, however, the big issue is, as you rightly identified, China. China is showing all the hallmarks of managing its slowdown very well, so I don't expect it to collapse. I absolutely expect it now to be able to manage the deflation of those bubbles that we have known and worried about for so long.
Let me just show you everybody the chart. So this is these are the metals that are rebased. So you've got white line is copper, iron ore, and the LME position. And as you can see, the move here, it's the iron ore move down that's, again, this is rebased, that really stands out. Stuart, walk me through again what's happening with the oil market. These are very separate sort of buckets that we need to think about at the moment. But nevertheless, the oil story in the United States just keeps ramping up. And we saw that again in the data. The OPEC members must be looking at this and scratching their heads and wondering what they've got to do.
Yeah, scratching their heads might be a very polite way of putting it. Yeah. I suspect it's a little bit more dramatic than that.
Yes.
I mean, I was looking at these numbers yesterday, and I look at this just about every day, but the Americans have managed to add close to 900,000 barrels a day since October. And that is absolutely phenomenal. I mean, that basically adds another Qatar and a half.
Yep.
Wipes out a great deal of what they've managed to achieve in the OPEC and non-OPEC production agreement. So, yeah, it is a major headache. It will continue to be a major headache, and no signs that it's going to let up soon. Looking at the Baker Hughes rig numbers, which you could sort of say are an early indicator of what's to come in production, that suggests we've got a lot further to go in terms of added barrels. So, what's the situation? We're going May 25th is the big meeting in Vienna.
Yep.
Positive noises from just about everyone. I think even Iran's on side this time for an extension. Maybe they go for 6 months. Maybe they attempt to deepen it. I mean, surely the pressure must be on them not only to extend it, which I think is sort of the bare minimum. Maybe a few more barrels would help us stay above 50, thereabouts.
Right. Keep an eye on that one. James, the numbers from the oil companies this morning, though, and yesterday BP, look fairly solid right now. And if you have them in your portfolio because they're big divvy payers, do I need to worry that a significant leg lower in oil would be something that would make some of those dividends slightly more uncovered? Not from a Shell point of view, but maybe from sort of BP's.
I think you have to be very worried about the sustainability of dividends. I mean, even Shell, which people most certainly laud as a great dividend payer, is doing so at the real risk of its long-term capital position. And I worry that we have not only very uncertain oil prices because of the supply dynamic, but also we have a global decline in demand relative to prior expectations. Motor cars are more efficient. Energy production is now no longer significantly dependent on hydrocarbons. So for me, there are real headwinds for the entire sector, which suggests to me that any further price improvement is an opportunity to sell, not confidence building to buy more.